And welcome to today's Spain Masterclass from A Place in the Sun. My name is Andy Bridge. In normal times, we'd be putting the finishing touches to our exhibition next weekend at the NEC Birmingham, A Place in the Sun Live, which is something that we do throughout the year. We also publish A Place in the Sun magazine. We run the website aplaceinthesun.com. And imaginatively enough, we have a currency business called A Place in the Sun Currency. So the idea of today's program is that we provide potential buyers of property in Spain with a bunch of webinars on the constituent parts involved in buying and owning a property in Spain. So we've broken it down into different webinars. You've given your time and come along, for which we're very grateful. And you have one continuous link. So the link that you've clicked on now, you can join at a later time for a different webinar whenever that might suit you. So please feel free to drop in and drop out. Please also feel free to interact with us. So you'll see somewhere on your screen a Q&A button. If you click on there, you can put in your questions. I will put them to the panelists on your behalf, and we'll try and get through as many of those as we're able to throughout the course of today. So there's a lot to get through. We're going to try and be very punctual. We have a pretty strict schedule of people coming in and coming out on this same link. So we might get some unwelcome entrants at the wrong time, but we'll try and manage that and keep you all informed and amused. So we're kicking off today with mortgage availability, and I'm pleased to welcome Alison Lauder-Dakota from Mortgage Matters. Alison, how are you and where are you?
Good morning, Andy. Thanks very much for inviting me onto this new and exciting initiative. Who knows, it may take off and this may be the way of things to come, because we're all kind of used to Zoom meetings now, aren't we, after the lockdown.
Absolutely.
So I'm based in Marbella. My name is Alison Dakota and I'm the owner of Mortgage Matters Spain. I'm based in Marbella, in the south of Spain. We are independent mortgage brokers, which means we don't work for any one bank. We have agreements with all of the major banks, and our job is to basically broker the best deal available for our clients. I think important to mention at the outset that we are fully qualified UK CMAC for brokers and also qualified to Spanish levels as well. New regulation came into Spain last year, and I know that it's not a very exciting topic, but it's something that's important to everybody to know that we're fully regulated, licensed and registered with the regulator, which is the Bank of Spain. So anyone these days giving you mortgage advice needs to be properly qualified and properly regulated.
No, I think you're right. That's a very good point to make, Alison. If people have given up their time on a Sunday morning to join a webinar about mortgage, then accreditation, they're obviously serious, and accreditation is a very key point, isn't it? And yeah, that's something that people should look for.
That's right. Absolutely right. Yeah.
So as an independent broker, that means you're not just trying to push a product from Banco Sabadell or Santander. You can survey the market and try and find out the best deal for a potential client.
Yeah, that's exactly right. So we have access to the whole of the market, and basically what we have is a panel of lenders. And on that panel of lenders, obviously we get new lenders on who come into the market. Sometimes we take them off because they make their criteria a bit too strict. So it's a fluid thing. It's something that we're analysing on a regular basis. So basically we don't sell properties, we don't do any legal work, all we do is the finance. So we talk to the banks on a daily basis, and what we do is we try and fit the client's profile to the bank, because one size doesn't fit all, as we know.
And which lenders, just give us who's on your panel at the moment? Are you able to tell us the names of the banks or companies that you're working with?
Yeah, we have Banco Santander, we have La Caixa, we have Bankia, we have Sabadell, we have Bank Inter, we have Cajasur, we have Cajamar, Unicaja, most of the major players out there we have agreements with.
And I can think of a very obvious answer to this question, but why would somebody come through you for this service rather than contacting the bank directly?
Yeah, I mean, they can contact the bank directly, but what we find with the banks is it's not the bank itself that's the good lender, so to speak. It's the contact that you have within the bank that's the key as far as brokering a mortgage is concerned. I mean, you might be surprised, but if I went, for example, to Banco Santander in, I don't know, Marbella, with a case, and then maybe went to a different branch of Bank or something, then it's very possible that one branch might approve the mortgage and the other not. So the key is absolutely having the right contact within the bank, one that obviously understands the documentation and understands the client's circumstances. For example, if a client has a buy-to-let portfolio, not all of the banks understand that or like it. Other clients who are self-employed, who pay themselves a minimum salary and the rest they take in dividends for tax reasons. Again, not all of the banks will understand that way of working. Or it's a culture difference as well.
Okay, that's interesting. A bit surprising in a way that a bank wouldn't have a centralised office with very kind of black and white criteria. So you say it can come down to location and relationship.
It can very much, because basically what happens is there's a filter at branch level, and once it gets that through that filter, then it goes to the central risk department, as they call it. So it might or it might not get through the initial filter, and then it really depends on who you get at the risk department as well. So yeah, it can come down to personalities and individuals, and it's certainly key to have a good contact person who understands the documentation.
Okay. And okay, we're getting some good questions coming in, which I will come on to shortly. But just to cover off the basics, so what sort of criteria, what qualification criteria are the lenders typically looking for? I'm sure it does vary between lender, but can you just give us an overview? If somebody's sitting at home now and thinking, right, okay, I'd really like to borrow X to fund this overseas property purchase, typically what will one of those banks on your panel look for in an applicant?
Yeah, well, first of all, I mean, just to let people who are listening in know that the maximum that the banks will lend at the moment is 70%. That's the maximum that they will do for non-residents.
That's of the purchase price of the property, yeah?
Of purchase price or valuation, whichever is lowest.
Purchase price or valuation?
Or valuation, whichever is the lowest. Yeah.
Okay. And what people should also be aware is to bear in mind the additional costs in buying a property in Spain.
That's
probably
exactly right.
10-12% or something.
That's exactly right. So what I was going to say, 70% is the max. A lot of the banks have reduced that maximum to the Brits because of Brexit. So a lot of them will be looking at 60% now. Having said that, if you have a strong profile, I can still push them to 70. But yeah, work on 60% to be on the safe side, which means you need to have a deposit of 40%. Plus enough cash to cover all of the costs involved. So you're looking at having about 50% of the purchase price in cash. A lot of people are maybe not aware of that, but they need to have a substantial amount in cash in order to purchase in Spain.
Yeah, and what about age restrictions? I've got a couple of questions in from Helen Brooks asking, is there an upper age limit? And another one from Rosemary. Rosemary, I'm not going to disclose your age, but she also asks, what's the upper age limit?
Usually you'd be looking at 70, some banks will go to 75, but what I say to clients who are a little bit older is what they can do is include children on the application, as long as those children are in full-time employment. We can include those on the mortgage application, and then of course you've already got them on there for succession purposes or whatever. So that's what I do with a lot of older clients. We can include the children on that.
But presumably, if you're including the children, it's dependent upon their financial circumstances, and they're then financially responsible because their name's on the contract.
Correct. Yes. Yes.
Right.
Yes.
Okay.
It's not just appears on the mortgage yet. They're obviously financially responsible also.
Okay. Simon Davis asks an interesting question. If you have an account with Santander in the UK, does that give any support to a mortgage application with Santander in Spain?
No, I get that. I get asked that a lot. You would think logically it's the same group, etc., but it's not. It's a completely separate entity altogether. So it doesn't add or take away from your from the way that they will look at your application.
Right.
But just going back to what you were asking before, which I don't think I answered the question, the criteria, what they're looking at, they'll be looking at your income, your existing income in the UK, and they will also want to know about your existing debt in the UK. And they will give you what they call a debt income ratio. So in other words, they will allow, it depends on bank, but they will allow around about 30% of your net monthly income in debt. That's including your existing UK debt plus the new Spanish debt.
Just say that again for me, please. I didn't quite get that.
So basically, they will do a debt-income ratio as part of the criteria. It's not the only, but just to simplify things, they will look at what your net monthly income is, and they will allow you to have 35% of that in repayments in debt. Okay, 30 to 35%. So for example,
existing commitments then.
Existing commitments plus the new Spanish debt. So they don't really want you to go over 35% or 30% of your net income in debt.
And that's including any outgoings you already have in place. So any existing UK mortgage payments and.
Yes. Yeah. So existing UK mortgages, personal loans, car leases, not credit cards. They're not really worried about credit cards, but existing mortgages in the UK. Yes.
Right. Okay. And well, Mark Dorks says, "Hello, Alison. Nice to see you again." I don't know if
Mark. Yes,
you've
I know
done
Mark from other times. Nice to hear from you.
And Steve Otwell asked about what percentage you have to put down, which we've dealt with. But somebody anonymously asks, what is a competitive mortgage rate right now in Spain? So give us a sense of what people can get on mortgage rate.
Yeah, on a variable rate, you'd be looking at around about 2%, something like that. And if you wanted to fix a rate, you'd be looking at around about 2.6, 2.7%. Now, it's different to the UK fixed rates in Spain because basically what they do is they fix the rate for the full term. So if you have a 20-year mortgage, you will have a fixed rate for the 20 years. It's not like the UK where you fix it for 3 to 5 years and then you remortgage it.
It's fixed for the full term. It could be fixed for 20 years.
Yes, exactly. Yeah.
Okay.
Yeah. So if there are clients who want to keep the mortgage for the full term, they may like to go for a fixed rate. If you're looking at paying off early, which a lot of clients are looking at doing, maybe worth going for a variable rate. But we have the option of both.
And what about penalties? So I might take out a mortgage and be planning that when I reach a certain age and draw down some pension money, I want to pay it off. Is there are the penalties in place as per the UK?
Not as per the UK, no. A lot of flexibility with Spanish mortgages as far as paying off early is concerned. So you'd be looking at indication 0.25% of what you pay off in the first 3 years, and after that, 0. Okay, indication. So, for example, for every 10,000 euros you pay off, 25 euros, very small. You have got a lot of flexibility with being able to pay that off early, and a lot of clients ask me that because a lot of people have the intention of paying it off at retirement, or they get a bonus, or draw down on a pension lump sum, or whatever. So you do have that flexibility.
Okay, and what do you say to people who contact you and say, "Well, I'm thinking of trying to get a mortgage in the UK," or I don't know. I guess people can do equity release from a UK property. That's a different kind of thing. But do UK lenders lend money against overseas properties? I'm not sure that many of them do.
Not specifically, not anymore. They did before the previous crisis, but no, there aren't any UK lenders at the moment. But I mean, there are good reasons for borrowing as much as you can in euros at the moment. In fact, I have a lot of cash buyers who borrow euros because of the exchange rate at the moment. If you borrow as much as you can in euros, it means you're converting as little as possible sterling to euros at the exchange rate the way it is right now. But because, as we just mentioned, you've got flexibility with the Spanish mortgage. So the idea is when the exchange rate goes in your favour, you can then convert that sterling into euros when it's back up at 120, hopefully one day, and you can pay off the mortgage if you want to. So it's a way of hedging the currency at the moment. And I think the other thing to point out is if you mortgage your main home in the UK in order to purchase a property in Spain, then what you're doing is you're putting your main home at risk to buy a second home abroad, if you see what I mean. I think it's better to keep the assets separate because, you know, God forbid you get into trouble, economic trouble in the future, you're putting your main home at risk for your Spanish property. Better to keep the two things separate. Having said that, I do have a lot of clients who borrow as much as they can in Spain, and if they're missing a little bit of cash for the deposit, they can do a bit of an equity release as well. We'll come back into.
I guess another reason as well for having the mortgage payments in the domestic currency is if you're doing rentals or earning some money over there, then if that's part of your financial dynamic, the way that you've structured to pay off the mortgages to get some rental income, then
exactly right.
It helps that there's no liability and no exposure there from collecting in one currency and having to pay a mortgage in a different one.
Exactly right. Yeah, and a lot of clients that I deal with obviously want the property for family use to enjoy it with the family, but when they're not using it, they are looking at, you know, doing rentals and helping with the mortgage payments. So yeah, it's a good way to structure it.
Okay, let's try and cover off some more questions. One in from Laura Jenkins says she's looking to buy a property near Malaga between herself and her cousin. Can a mortgage be split between us? I guess that's just putting two names on the on the arrangement, isn't it?
Yeah, I've done mortgages for family members, for friends, you know, who want to share the property and use it at different times of the families. Yes, no problem with that.
Okay. And Paul Nardin asks, my partner's an EU citizen, I'm British. How would a bank view a joint application?
Are they tax residents in the UK? If you're tax resident in the UK, even if you've got a EU passport, you're still considered to be a UK applicant, so to speak. That's where you pay tax.
Okay. And we did touch on this, but a bit more on from Louise Martin on the common mortgage term. So can you just take a mortgage for 5, 10 or 15 as you can in the UK, or is it more fixed in Spain?
No, you can do. You can take a short-term mortgage if you like, 5, 10, 15, 20 years. Like I say, the maximum is up to age 70, 75 in some cases, but you can do short-term mortgage, no problem.
Okay. Helen Venables asks about healthcare. Well, Helen, we're going to cover that later on in today's program. If you head over to this website address here, a place in the sun digital.co.uk, if you look at our webinar area, you'll see the program for today's events. And we have a healthcare session like this, but just on healthcare at 2 o'clock this afternoon. It's the same link, just click on that, join us. We'll be discussing all things to do with healthcare. Can I also ask you, it's best if you put your questions in the Q&A button rather than the chat. The chat doesn't show up as well for me, so I'm struggling to see some of the questions that have come through on your chat, and it's much easier on the Q&A. Darren Benton, Alison, asks, would I need proven employment income for a mortgage, or can I use savings? I think that's a straightforward.
Yeah, no, they're looking for income. They want to they're looking for affordability. So basically, what they want to see is regular income coming in. So yes, you would need to be employed or self-employed.
Okay. And somebody in the UK with a Spanish national partner, we both live and work in the UK. Would it be the same sort of loan to value? Does nationality doesn't impact any loan to value, really?
Nationality doesn't impact at all. Again, it's where you're paying tax. Like I say, we're looking at 60% in most cases for the Brits, but if we do have a strong profile, I can push them to get the maximum 70.
Okay, and quite a few questions from about rental. Nijat Barton is one of these people. Is rental income taken into consideration at all? Potential rental income by the lender?
No, because it's not. They don't do buy-to-let mortgages in Spain. So basically, what they're doing is they want to lend to clients who are looking to buy a second property for family use, etc. Obviously, they understand the fact when they're not using it, they can rent it out, but they won't take any of that potential rental income in the UK. If you've got a buy-to-let portfolio in Spain, if you've got a buy-to-let portfolio in the UK, yes, they will take that income into account.
Okay. Kim Greenwood asks, I hope I've phrased this correctly, do Spanish banks make a distinction between income for limited company contractors versus permanent employees? I guess it's just proof of the regular income, isn't it, rather than employment?
It's proof of regular income. Let me have a look at your tax returns. Let's show them regular income on the tax returns over the last 3 years, and then we can argue the case as long as we can show that they're looking, as I say, they're looking for affordability. So anything we can do to back that up. I have done mortgages for contractors.
Okay. And David Heath asks, when you say the maximum age is 70 to 75, is that the age that you can take out the mortgage and start it running, or is that when you have to complete it by?
That's when it has to be finished by.
That's when it has to be finished by. So if you are 70, then taking it out.
You'd need to, if we can go for 75, you'd have 5 years, but again, recommendation, put the children on there.
Put the children on there and get them committed to pay off your happy retirement.
Yeah.
You've done enough for them all your life. Now it's payback time, isn't that right?
Exactly.
Okay. When you move your papers around there, Alison, it crackles a bit on the line. So just be careful with that.
I think it's my chair actually.
Oh, it's your chair, is it? Yeah. Okay. Not to worry. Bal Kaur asks about purchase prices. Purchase costs. Well, we're going to cover that in detail in an upcoming webinar. Just check the schedule later on today. What about mortgage implications for a Canadian who's been living and working in the UK for 2 years? That's from Eric Fowler. Alison.
Yeah, I can do mortgages for Canadian nationals. I've just done one actually, who lives in Canada. And again, if you live in the UK, they will treat you as a UK tax resident, so the criteria will be UK criteria.
Okay. And an anonymous one, just picking up on the thing that I wanted clarity on, is, so if I understand this correctly, if one's net pay is, for example, £100, the limit on the overall debt repayment the bank would use is £35?
Correct. Exactly right. Yeah.
Okay. Right. We have a whole ton of questions coming in, and unfortunately, we don't have time to answer them. But Alison would be more than happy to answer these questions to you directly. No commitment. Very quickly, are you fee-based or commission-based? How do you make your money?
Fee-based, because one, not all of the banks pay commission, and also the service we give is not just brokering the finance for clients. We basically like to think it's project management, actually, taking them right the way through the whole process, coordinating with all parties involved, so with the estate agents, with your lawyer, with the valuers, with the banks, of course, etc., and basically helping you all the way through the whole process until you get the keys at completion.
Okay. And how does the fee break down in terms of, obviously you have to put in the work to try and get the mortgage if it's unsuccessful application?
Yeah, basically what I do is I will have an initial phone call with the client, give them the general information about the costs, the cash required, the borrowing levels, etc. Then I'll have a look at their fact find once that's been completed, and from that I will know whether I can do the mortgage or not. So I'm not going to take on any clients if I know that I can't do the mortgage.
Right.
And at that point I will charge a small initial commitment fee. And the final fee is only due once I have a written approval in writing for the client.
Okay. We have a couple of colleagues arriving a couple of minutes early for our next session. Let me just show you how you can contact Alison. So Alison works for a company called Mortgage Matters. You can just go to Alison's website and contact her that way. Her details will be on there, no doubt. But I'm just going to show you our exhibition website. This is where you signed up to today's event. On our Meet Our Exhibitors page, which is here, we have a list of all the exhibitors by country. And Alison is sharing a page with a company called My Lawyer in Spain. So there's a card here for Mortgage Matters. You click on Mortgage Matters, brings you through to the page which is for My Lawyer in Spain and for Mortgage Matters. And you can either book a meeting, and here's the schedule. So they're the times for today that you could book meetings if you want to book a meeting today. And you can just tab through there to get to next week. And they're the meeting times available from next week. Just click on those to book a slot. And there's Alison's details. Click on there to book a meeting. And you can also just message Alison your question. So apologies if we haven't covered your question today. Just click on this page, stick it in here, put your name in, first name, second name, email address, ping that off to Alison, give her a call, whatever it is you want to do. And that will be a way of answering your questions. So, Alison, thank you. That's been really insightful. I've learned some stuff there, and I hope the good number of people, over 265 people joining on a Sunday morning to hear about Spanish mortgages. That's wonderful. Thank you for your time, Alison. And I think you're going to join us later on when we have a bit of a free for all with all our exhibitors at I think it's 3:30 this afternoon.
Perfect. Looking forward to it, Andy. Thanks very much.
Okay. Thanks, Alison. We'll see you later on. Bye for now.